Hey, everybody, welcome back to Grain Markets and Other Stuff. Thank you for joining me. It is Wednesday, December 9th. As I speak here this morning, it's about 11 o'clock Central Time. We have a USDA report tomorrow. I'm not going to talk too much about the report. I did a little bit of analysis ahead of the report in this morning's podcast. And if you're looking for some pre report estimates and that sort of thing, they can certainly be found in a number of places. I figured I would take a little bit of time today to discuss the corn market and some of the technical implications here. We've backed off from the highs, but at the same time, we've been able to hold some levels underneath the market on a couple different occasions. So I figured I would do a quick rundown of kind of the technical setup here and give you a basic idea of the lay of the land. Remember, everybody, if you need some help with your grain marketing, if you would like to know what I am doing every day of the week, every business day, go to my website, go to standardgrain.com, click on Grain Marketing Plan in the upper right-hand corner. And for $49 a month, you can subscribe to my grain marketing plan and subscription service. It includes a morning email, which goes out every business day at 6:30 in the morning Central Time. Also a text message service. You will be made aware of when, how, and specifically I am pricing corn, soybeans, and wheat throughout the year. There's no obligation there. There's no additional fee. You don't need a trading account, and you can cancel it at absolutely any time. There's no obligation. I make this very, very simple. So to get to this corn market, I want to give you a very kind of brief look at the charts here and some of the potential technical factors that we're looking at. I'm going to put the nearby March corn contract on the screen here. The first thing I want to talk about is this trend line, and this blue trend line. If you're watching on the video, there's an uptrend line that started with the August low. It was August 12th. 331.5 was the low in the March corn contract on that date. August 12th is when we bottomed. And since then, the market had kind of followed this trend line higher. We went down and tested some support and kind of found some support there in late September. We then tested the trend line again in early November. And now we are trading below that trend line and have been for 3 or 4 trading sessions. So I'm going to go with the idea here for the moment that the uptrend has been busted, and I'm going to pull this trend line off of the screen here. I'm going to say that this line has been negated for the time being. So what that leaves us with here short term, I think, is kind of a sideways to lower deal. If you notice, in each of the last 1, 2, 3, 4, today would be 5 trading sessions, we have had lower highs than the previous session. And that is not necessarily a positive factor. The fact that we went up and traded that high at 439.5 on November 30th and then posted a key reversal, which I talked about in a previous episode where I did the corn charts, that was kind of a negative factor. And in this case, the key reversal, as a matter of fact, did result in some additional selling pressure, which, we've seen some back and forth, but that was your peak very firmly for the time being, was that 439.5. And for the moment, as I sit here today, 439.5 is your big time technical hurdle. If we were to see a rally on the report tomorrow or a rally on additional Chinese purchases, South American weather, whatever it may be, that 439.5 March corn futures, that is your big hurdle from a technical standpoint. Now, that brings me to my next level, which is a level below the market. 414.5 March corn futures, nearby contract, is where we bottomed on December 2nd, and then the market bottomed very close to there at 415.5 on December 7th. So within the span of 4 trading days, we went down and we tested this 414 to 415 area 2 different occasions, and we were able to hold it successfully. So for the moment, to the downside, that's your big support area, that 414 to 415 level. Now, if this trend continues, where we continue to have lower highs versus the previous day, and this little downtrend that we have in place continues or accelerates, what's your next target? What's kind of the next area? I think very obviously 396 is the spot. 396 is where we bottomed in October following a correction. In October, when the rally was making new highs, we went up and we peaked at $4.22 on October 27th, and then we saw a big sell-off. We 2 days later bottomed at 396. I'm going to say that 396 is some sort of significant low and potentially a downside target in the market. We've still got a lot of factors here that could result in some selling pressure between now and the end of the year. I've discussed the fund length in the market and why I think that makes us a little bit more vulnerable here over the next, say, 3 weeks. There are other factors out there. South American weather, ethanol, I think is going to turn into a problem. We've seen good ethanol production. We actually saw a really good production number today. The problem is that stocks keep building and forward ethanol production margins are terrible. So we could again get into a situation where we see not just a poor year over year performance like we've been seeing, but you could see ethanol production fall off even further or more drastically. So there's always risk here, especially in this particular instance. You've got this big fund long, you've got a market that has trended higher, and you've got the end of the year coming up. So I think that there is some downside risk. I really hope we go the other way. I hope we go back up and blow through that 439 and see this market at some even better levels. But for the moment, I'm looking at the action here technically. These lower highs in each of the last for today would be 5 trading sessions. That's kind of a red flag to me. If we were to go down and trade below that 414 level, I think that opens the door to a quick move down to 396. You could probably go down to 396, still have the funds long the market, still have some bullish sentiment, and it would not be a total technical disaster either if we went down and traded 396. I would call that probably a technical correction if we were able to go down there, test that level, hold it. I think that would be something that may ultimately be healthy for the market. To be honest, it's typically healthy to see corrections in markets, even in the midst of a big bull run like we have going on right now. I think, as a matter of fact, if we want to see this thing continue into 2021, we may need to see the funds set back a little bit, maybe peel back a little bit of that position, maybe get the sentiment to shift just a little bit. Nothing changes sentiment like price. And if you were to take 25, 30 cents off this market, you would have some bearish sentiment emerge. You would have some bears emerge in the marketplace. And a lot of times that's what it takes. A lot of times you need to get back to like equilibrium or somewhere close to it if you want the rally to continue. And I want the rally to continue. We all want the rally to continue for sure. But I think that if you were to go down and even say test that 396 area, I think that would kind of reset the market a little bit. It would peel back some of the fund length. It would give us a little bit of equilibrium, and that there may be some bearish sentiment that emerges, whereas you don't have a ton of it right now. And that would not be a bad thing necessarily. It really wouldn't. I hope this was useful to you. This was just a quick chart review. Again, I like doing these once every 2 or 3 weeks for each market, and I'm going to continue to do these. If you like this sort of stuff, let me know. Hit the YouTube page and leave me a comment. And remember, if you like what I'm doing here, hit that like button on the YouTube video. That's the easiest thing you can do to help me, is hit that like button. It helps the YouTube algorithms to spread these videos out a little bit more and help me get a little bit more viewers. So if you like what you're seeing, hit that like button for me. I would really appreciate it. Everyone have a great day today, and we'll see what the USDA report says tomorrow. I may do a quick update after that report tomorrow afternoon. Catch you a little bit later.